My name is Dexter O, Assistant Manager for Africa, Europe, Middle East, Central and South Asia Global Division 3, Singapore Business Federation, and I will be your host for the day. Today's webinar is something special, and it is the opening webinar for a series of many under the Festivals 2022, brought to you by Singapore Business Federation. So, what is a festival? Spelled with the FYI in the front. Festivals is SBF premier digital space designed for sharing overseas market information and hosting virtual cross-border interactions for companies on their journey of internationalization. As the world emerges from COVID with webinar fatigue, Festival aims to engage business executives differently, but digitally. With different editions that spotlight selected regions and industry sectors, each festival session participants can sign on as Festivals Insider, pronounced Finsider, spelled with an FY as well, will be able to enhance their knowledge of market dynamics and business opportunity, not just through live webinar, but also retain the knowledge at their fingertips with the help of useful guides and downloadable fact sheets. On a more interactive notes, they can develop new markets by joining the business matching pathfinding, pronounced pathfinding, also spelled with FY in the middle, simply by reaching out to the organizing team at SBF and asking for business introduction. Currently still a work in progress, Festival will also have a section with project information that Singapore companies can consider investing in those projects aligned with their own business growth strategies. I understand that the festival even engaged the next generation of business executives by throwing a challenge to young adults with budding talents in creating fast infographics, pronounced finfographics, for the business community. Finfographics are essentially infographics spelled with, not surprising, an FYI. With the many FYIs floating around, SBF Festivals really hopes to create a platform for your information, for your industry, and ultimately for your internationalization. The festivals is part of the program of Global Connect SBF, which is our globalization initiative in partnership with Enterprise Singapore. Today's webinar is also supported by Confederate of Indian Industry. On this note, I would also like to thank our principal partner, Convera, on behalf of SBF for their strong support to the entire festival initiative for the second year. Formerly Western Union Business Solution, Convera is now considered as the largest non-bank B2B cross-border payments company in the world. Today, we are honored to have one of their senior representatives joining us as a speaker. I look forward to his insightful sharing later. Just a little housekeeping before we get started. If you have any questions during the presentation, please type them into the question box in your Zoom control panel. I will bring them up during the presentation and we'll also have time for questions at the end. For the program today, we will have Mr. Terence O, Director for Dealing Asia Convera, speaking on actionable plans for Singaporean companies to enter South Asia, and Mr. Bipin Balakrishnan, Partner, Tax, to share about emerging market trends and opportunities in South Asia. After which, we will have a fireside chat moderated by Mr. Balakrishnan, fronted by Mr. Gautam Banerjee, Chairman of SBF, South Asia Business Group and Chairman of Blackstone Singapore, Mr. Prasu Mukherjee, Chairman, Universal Success Enterprise Limited, Mr. Terence O, Director of Dealings, Asia, Convera, Mr. Marcus Lim, Co-founder and Managing Director, Ecosoft, and Mr. Jayakrishnan Gopalakrishnan, Executive Director, South Asia, Middle East and Africa, Enterprise Singapore. To start today's session, let me quickly walk you through SBF and our globalization initiative, Global Connect SBF. Global Connect SBF is an initiative that has been formulated in assistance to Singapore companies that are looking to internationalize for the first time, as well as companies that are intending to expand and deepen their presence in overseas market. Global Connect SBF helps Singapore companies to first learn about the country and the business opportunity it presents through sharing of useful resources like curated market information, advisories on free trade agreement, and structured training through workshop webinars. We also conduct overseas visits for members to let them experience and understand local business and culture, which help them to better understand the potential countries they wish to expand into. Second, to land business deals and investment projects through B2B matching, facilitate market and business development through identifying the right market for business and assessing the business capabilities. We currently have 3 SBF overseas office called Singapore Enterprise Centre, with plans for more in the future. Currently set up in Jakarta, Ho Chi Minh City, and Bangkok to provide on-the-ground facilitation and in-market assistance. Lastly, we assist Singapore companies to localize in those markets for a suitable business presence to help to grow and integrate with local network and strengthen their presence. Next, we will conduct a poll to explore your interest on questions relating to financial grants to take your business overseas and at which stage of internationalization is your company currently at. For this webinar, we have assembled a team of speakers and panelists with vast experience in doing business in South Asia to provide knowledge and answers to some of the questions you may have for potential ventures in the region. Next, I would like to invite Mr. Gautam Banerjee, Chairman of Blackstone Singapore and hold multiple senior positions, to provide us with the opening speech to the inaugural festival for 2022. Mr. Banerjee is also the chairman of Blackstone Singapore, one of the largest investment management company in the world. He was our former nominated member of parliament in Singapore from 2007 to 2009. Mr. Banerjee has been in the investment sector for over 30 years and has experience in working and leading projects, businesses in South Asia. Mr. Banerjee, please.
Thank you, Dexter, for that kind introduction. And to all our speakers and fellow speakers, and of course, all the participants of our webinar, a very good afternoon. Very good afternoon to those of you in Southeast Asia, and very good morning to those of you in South Asia. It's been a very difficult few months to our friends, for our friends in South Asia, particularly in Bangladesh and India. First, we had a very hot season, and in this last few days, heavy rains and flooding, which has kind of brought life to a standstill. Lots of lives have been lost and property damaged. A clear reminder that climate change is having its impact all over the world. It's not only Southeast Asia and South Asia that's suffered. You've had flooding in China. You've had continually have forest fires in Australia, in the US. You've got summer and the heat of summer coming on very early in Europe. So I mean, a real issue, climate change, and the need for sustainability, and for companies to become much more conscious about these challenges. When we talk about opportunities, and this is an area that we must really look at. But I'd like to just start by, of course, welcoming everyone. And this is a very timely event, and as Dexter said, is the first of a series of events that we will have on South Asia. And because as we look at a very challenging time for the world, the global geopolitics, which has been brought to the forefront, the problems of global geopolitics being brought to the forefront with the war in Ukraine, but there are other issues with the US-China relationship, with all of the other problems that seem to plague us around the world. The fact that after years of cheap money, we have interest rates rising to counter inflation, supply chain problems. I mean, we are in a very difficult position. The stock markets have already reacted to it. We are in a downward cycle after several years of markets rising. Even during the pandemic, things seem to have got under control as far as the financial markets were concerned. But it looks like, for the next couple of years, we are going to be in a very difficult period. And many of the things that we did over the last maybe decade, we need to revisit. We also need to look at markets with a fresh pair of eyes, look at new markets. And for many of our Singapore and Southeast Asia companies, we may need to have more focus on South Asia as a country and as a group, as a region, because I mean many of the countries in South Asia are large countries and have the sort of demographic dividend that they are reaping because they have large workforces, a lot of development opportunities, which give many of Singapore businesses opportunities. So if you look at maybe start off with India, the largest of the South Asian economies. I mean, it's a real giant with a population of 1.3 billion and a very young population, which is going to obviously come through its the educational system, come into the job market, and provide a lot of opportunities for companies that could benefit from exporting their services, investing in the country. And for India, I think some of the opportunities are opportunities that have existed for a number of years. India needs it's essentially needs capital and needs help with infrastructure development. And already Singapore, some of the large Singapore companies are there, whether it is port development, airports, aviation, whether it is in the digital space, in telecoms, in data centers. Singapore companies are already there. But there are new emerging opportunities. There are emerging opportunities in energy transition. So, for example, a lot of the commercial buildings and warehouses need to be much more energy efficient going forward. And I think there are companies in Singapore who are very experienced in this area, conversion into solar power and so on. So there are certainly opportunities there. There are opportunities in manufacturing still because of the supply chain. A lot of MNCs are diversifying their manufacturing base instead of getting all of their manufacturing in China. Even, I mean, the well-known example of Apple starting manufacturing some of their mobile phones in India, and it's in such a large company moves in, you have a lot of other support industries that also move with it. So and that's a big plus for India to have high-end manufacturing of Apple phones in India. There's manufacturing of in the new space of batteries for electric vehicles, packaging. So there's a lot of opportunities in the manufacturing sector. There are a lot of opportunities in the service sector. So if you look at the Indian economy, India has a lot of young people who need to obviously go to university. Entrance examinations for universities are very competitive. So educational services and edutech, a very important area. Just a couple of years back, my firm Blackstone invested in what seemed to be a very mundane educational training provider. It used to provide training, or still provides training for students who sit for the IAS exams and for the entrance exams for IIT and IIM. We acquired this company and worked with the founders to make it a more digitally relevant business. And having developed it, it is now its valuations increased. It's become much more resilient and did very well during the COVID period. So similarly, electric batteries for electric cars, we made an investment in that space, and we are now manufacturing batteries for Tesla around the world. So there are lots of these types of opportunities in the whole area of food-related businesses. There's lots of things like flavors and fragrance businesses where you can bring in the technology and so on. So so India actually represents a tremendous number of opportunities, and being such a large economy, I think that will remain so for a while. The other big economy in South Asia is Bangladesh. With a population of 150 million, Bangladesh has really made a lot of progress in its industrialization. It's already a very established place for retail, for ready-made garments. It's in fact a leader there, and it also has many other manufacturing industries, and because it's got a population of 150 million people, a lot of manufacturing is based in Bangladesh to serve its own needs. For example, palm oil, the palm oil kernels are imported from Malaysia or Indonesia and then refined in Bangladesh for the Bangladesh market. So, and I think Singapore companies have been already present and taking advantage of this. But Bangladesh again has a young population, and will continue to need investments and expertise, and certainly for its infrastructure. There will be opportunities to set up business parks, industrial parks, as will be needed in many other parts of South Asia, including particularly in India, where India is again a big center for BPO and IT services. So all of this presents tremendous opportunities for businesses in Singapore to take advantage of. We will hear from obviously our other speakers, Terence and Bipin, and then I think in the fireside chat we'll get an opportunity to take your questions. So at this stage I will stop, and because we have very limited time, and hand over to Terence.
Thank you, Mr. Bahaji. Next, I would like to introduce our other presenters and panelists for today's webinar. Mr. Terence O, Directors of Dealing for Asia in Convera, who will also be presenting today. Mr. O comes with over 25 years in the financial service and banking sector in Singapore and New York, where he spent his entire career on leading the transformation and reinvention of the industry. Mr. Bipin Balakrishnan is a tax partner with more than 20 years of experience in tax and trade strategic planning, and is a subject matter expert in India and Bangladesh. Mr. Bipin will also be our moderator during the fireside chat. Mr. Prasun Mukherjee, Chairman, Universal Success Enterprise Limited, who has over 20 years of managing and doing businesses in India and Bangladesh. Mr. Marcus Lim, co-founder and managing director, Ecosoft. Ecosoft focus on the wastewater management and environment service sector and have established themselves in the Indian market. Last but not least, Mr. Jayakrishnan Gopalakrishnan, Executive Director, South Asia, Middle East and Africa, Enterprise Singapore. He will be able to share his viewpoints from the policy angle for Singapore businesses that wish to venture into South Asia. Without further ado, I would like to invite Mr. Terence O to share on actionable plans for Singapore companies to enter South Asia markets. Mr. O will share with you on how Singaporean businesses can leverage on their expertise to venture into the overseas market. Mr. O, please.
Thank you, Dexter. And thank you, Mr. Banerjee, for setting the stage so well for the previous presentation. So I am presenting here, very honored to share the stage with such illustrious speakers and panelists. If you bear with me, I would like to spend a little bit of time talking about Convera, which is a name that may not be familiar to you. Convera was formerly Western Union Business Solutions. We have been acquired by private equity and invested in technology, people, and huge amount of transformation to grow. Convera is already the largest non-bank B2B cross-border payments company in the world. We have services in over 200 countries, providing over 140 currencies, and we serve 30,000 B2B customers globally. Convera helps to solve your business's global payment needs, whether that be simple spot FX, sophisticated FX risk management, or FX solutions, coupled with compliance at the core so that you can grow your businesses confidently. When we talk about any region or any specific country, it's important to keep in mind some of the big global themes that Mr. Banerjee has mentioned. So we'll give me few minutes to touch on that. The well-known issue of rising inflation and therefore rising interest rates as central banks struggle to combat inflation is going to be a theme for the near future, up well into the next year. This brings on tightening financial conditions with all of the implications. The potential for recession in many economies, the restriction in credit, and indeed even in cash available for investments. So all of us in this room need to deal with the double whammy of growing our businesses while faced with the restrictions of these global macro trends. Now, when we spoke in the festival last year, some of you might remember me talking about the after effects or the lingering effects of the global pandemic. And here, well into 2022, some of those effects continue to persist. So supply chains are still under pressure. Freight, air flight costs from the US continue to be an all-time high. Supply delays are given the uncertainty of lockdowns in China, and freight costs continue to be high and delivery timings are under pressure. So all those continue to bear down on business and bear down on economies. All is not doom and gloom though, because what that greater macro trend has brought on is a review of the globalization picture. So if we look at how financial conditions has tightened, definitely economies will be suffering. Definitely there's less money to invest in the world economy. But one thing that is going to be very, very interesting to look at is the change in the trends of globalization. So according to the KLF Globalization Index, which interestingly enough has been updated at this point only till 2019, just before the global pandemic, globalization has been a massive trend in the past couple of decades. However, the pandemic has brought about a couple of sea changes in the way regional economies view themselves. First, the supply chain issues mentioned earlier has made many economies realize that dependence on cheap and available and fast supply chains for both manufacturing and for fulfilling its citizens' needs is no longer a given. So we all have seen stories of shortages, anything from toilet paper to masks to even baby powder. And that means that economies have a couple of pressures. We've seen increased trade protectionism from some economies, which further worsen the supply chain issue and add friction to the global economy. But we've also seen, as a sea change, very, very significant shifts among regions to securing nearby supply sources. And that is actually, in the midst of all the doom and gloom I've been saying, a bright spot as far as investment in regional and local economies are concerned, right? Asia will look to be self-sustaining. South Asia will be seen as a credible source of exports, both of labor and goods. And similarly, Southeast Asia, with its abundant resources, will be seen as viable alternative sources to regional economies. So, in the midst of the global gloom, it's important to focus on what could be growth potentials in the regions we are talking about. Zooming into South Asia, it's no surprise that near-term growth forecasts from every source is predicting that growth will be slowing. And, for good reason, for all the factors that we've been talking about. Inflation risk especially is great. And if we talk about food inflation in particular, South Asia stands out where the potential for Sri Lanka to be a danger point and focus of food inflation is definitely there. As mentioned earlier, due to the reasons I described, the longer term outlook is more positive. Mature economies often struggle to find avenues for growth, But the beauty and the attraction of South Asia, as Mr. Banerjee pointed out earlier, is the myriad industries that are poised for transformation of growth as the economies move forward and outward. Now, all that needs to bear in mind the big question of China outbound investment. China outbound investment affects the region in two particular ways. One, the fact that Chinese companies face increasing costs onshore, face supply chain issues onshore, meaning that they look to diversify themselves across supply chains and across manufacturing capabilities. And that translates to direct investments in all economies in this region. The second and very obvious impact is that the Chinese economy and its output serves as direct manufacturing input to many of the manufacturing sectors across the region. So an eye on the zero COVID policy, an eye on continuing supply chain issues means that we cannot take the recovery and growth of manufacturing sectors in this region for granted because of the potential for disruption caused by any uncertainties going forward in the Chinese market. So plus and minus, both are important issues that I'm sure we can touch on a little deeper in the fireside chat later. Bangladesh, in the themes that we've just been talking about, is no standout in terms of growth forecast. Excuse me, the slide seems to have skipped. Let me go backwards on that. Yes, Bangladesh isn't really a standout given the macro issues we've been talking about with recent downgrades from the IMF, World Bank. Fitch, for example, has downgraded the 2022 to 23 growth from 7.7% to 6.5%. So as a company looking to get yourself involved with Bangladesh, what are the red flags to look out for? Well, as with other countries that are affected, higher inflation could force the central bank to hike rates. And therefore, the financial sector, which is a highlight, a potential growth area due to the digitalization of the economies, could be a risk area and definitely something to keep your eyes open on as you look to participate in or even invest in that sector. The long-term opportunities that we see coming out of Bangladesh include ready-made garments, and Mr. Banerjee mentioned that in his introduction earlier, but also inbound international remittances, which make up 6% of GDP. This is a signal that the export of labor and therefore the inbound remittances from the payroll and wages of that labor bring an exciting opportunities, both in terms of expected current and growth in future flow of funds into Bangladesh, and the exciting possibilities that might engender as some of these funds could potentially be flowing not only through traditional banking channels, but from fintechs all over the world, engendering possibilities for partnerships with fintechs onshore in Bangladesh. Moving on to India. India's economy has looked promising growth in Q1 due to the export market, but as expected with the trends and the concerns we've been talking about, there is a potential for decrease and therefore reduced forecast of growth in the coming quarters. Therefore, when we look at the Indian market, what are the industries that draw our attention? You can see that from our chart here, a lot of the sectors where we are projecting really strong growth have the word distribution or transport embedded in there. And it's no surprise that infrastructure is a major theme of this year's festival. Other than that, medical and surgical equipment is a sector that we view as extremely promising, both in the potential innovations that could happen there, as well as India itself as a market, given the gigantic size of the population. And finally, financial services, IT-related services, as I have talked about earlier, demand for talent, demand for investment outweighs the supply, and it is poised for continued growth in the next couple of years. When we look at the top end of the market and expectations, we also need to look at what might be at risk in sectors in India. And the interesting story there is what we normally call at-risk sectors. I have renamed here potential underperformers, because there's no sector here that we are projecting really reduction in. What we are merely saying that some of the sectors represented here, like pulp and paper, electrical fittings, represent growth, just not as fantastic a projected growth rate as the sectors I've mentioned earlier. For all of us as Singapore entities looking and interested in investment in India, I guess one of the concerns and one of the areas of expertise we bring here as Convera is with regards to our view of the markets and FX risk and how we can help protect you against that risk. Whether you are an investor, whether you're purchasing services and goods or from India, or even whether you are looking to employ persons onshore in India and have payroll commitments, you need to keep in mind where the Indian rupee might move with regards to your home currencies. For the very simple reason that you need to protect the value of your cash flow against FX rate movements. You need to protect your bottom line against unexpected increased costs or unexpected payroll payouts simply because of exchange rate movements. And Convera offers world-class FX risk management solutions that allow you to create a plan, build a plan for FX risk management around that, execute and monitor your progress. The important thing to remember about FX risk management is that slow and steady wins the race. We are not proponing that companies become traders. That is not what you do. What we are saying is if we have a reasonable view, an informed view of what our risks are based on the structure of business we engage in with India, then we can take slow and steady steps to protect our exposure, taking advantage of the services provided by Convera. So with that, I believe my time is up. Thank you, and I'm looking forward to the fireside chat later. Thank you.
Now, we will begin the fireside chat to discuss on potential questions organization might have if they wish to venture into South Asia. Mr. Balakrishnan again will be the moderator for the fireside chat. Mr. Balakrishnan and panelists, please.
Thank you very much, Dexter, and good afternoon once again, everyone, and welcome to this fireside chat. It's my pleasure to be the moderator of this fireside chat. In the next 40 minutes or so, we will delve into considerable experience of this very distinguished panel that I have today with me, who have all considered and in many ways contributed individually or collectively to creating pathways for Singapore businesses in accessing South Asian markets. The topic, as you know, is probably as vast as some of the countries themselves in South Asia, but we'll try our best to address some of the key elements of that opportunity that is South Asia. So with that, maybe I can turn to you, Jaya, if you don't mind.
Sure.
Let me kick this off with you. You've spent many years with Enterprise Singapore, exploring emerging markets in Latin America, Africa, Middle East, and you've been helping Singaporean companies establish themselves in these markets. And now you're doing the same thing with South Asia. How do you view South Asia from a Singapore business perspective? And what are some of your initial reactions to the opportunities that exist in South Asia?
Thanks, Bipin, and good afternoon, everyone. Straight to your answer, Bipin, I'm very positive about South Asia. I think that's the first thing I would say. There are issues, of course, the global issues that were mentioned earlier. It's affecting this region as well. But fundamentally, the South Asian economies, particularly the large ones, India and Bangladesh, they have the demographic dividend, the huge consumer market, a very, very vast and talent pool. So these things are going to keep the region growing at a steady pace. And if you just do the comparison, I'm looking across many markets at work here, and in the next year or so, 22, 23, South Asia is going to be growing faster than some of the traditional front runners. It's going to be in front of East Asia, it's going to be in front of some of the large economies in Southeast Asia, and certainly, of course, in front of the developed economies. Some of the big players are facing some very, very strong headwinds. Europe is right next door to all the issues. So I think South Asia is in a good spot. Let me just give you a couple of data points. In the first 3 quarters of 2021, Singapore firms invested up close to $11.5 billion in India. That's the first 3 quarters of 2021, a year in which we were just coming out of COVID. And those investments, and this is just India, those investments were going across the country. We haven't talked much about the states in India. I think that's an important element of the market. India is a big place, and I think at some point we'll have to get down to the states. But those investments were across, Karnataka, Tamil Nadu, UP. So it was diverse in terms of where they were going and also in terms of the sectors. We saw interesting investments in food catering, e-waste, data centers was very well covered by our firms. The other thing I would say is just a quick one on Bangladesh. I think it's the well-kept secret, maybe too well-kept in the Bangladeshi perspective. I think all that's been said is very true. They've got headwinds, maybe a little bit more susceptible to some of the food inflation and so on, but a very strong agricultural base of firms that are looking at food and food-related value-add addition projects. Again, I point to the human capital base, very digitally savvy, young. It could be the next BPO center in South Asia. So I think there are many things to look forward to in Bangladesh too. I'll stop there for now, Bipin.
Thanks, Jaya. This is really interesting, and I'm picking up on a couple of things that you mentioned about the talent pool that's available, and I'll direct my next question to Mr. Banerjee. Mr. Banerjee, the traditional view about both these economies, more so in India, has been that there is a talent abundance in India, right? Does this continue to be the case as Jaya was mentioning? Is there a opportunity for Singapore companies, some Singapore businesses to plug a gap in some shape or form?
Yeah, it's kind of interesting, this whole talent situation, because when you need palm oil, you go to Malaysia, Indonesia. When you need IT guys, you always go to India. But actually, we are actually seeing a real topping out of supply in the Indian market. I was just talking to one of the very well-connected economists in India yesterday, and he gave me some statistics which kind of blew my mind. I mean, you have 4 million graduates graduating from Indian universities and technical colleges annually, 4 million. But the number of jobs for white-collar technical, with people with technical expertise being created every year is 10 million. 10 million jobs and only 4 million new supply coming on. So and just below that, you have something like 200 million people in the workforce who are not equipped for these jobs, and who are really suffering, because even though many of these individuals were either in the agricultural sector or the informal economy, or working in low-end manufacturing, and even in India, as I think Jaya mentioned, I mean, low-end manufacturing, India is not competitive anymore. You have to get automated. You have to bring in new processes. So you have about 200, 300 million people who are kind of not able to take part in the job sector. So huge opportunities for training, whether it is skills training, whether it is tertiary education, and I think this is something which really is a huge opportunity. And I think Prashant might speak to us later on because he's connected with one of the polytechnics here. I think some of our polytechnics, skills training institutes, I think it's not that they're not doing it. I think they're already there in Rajasthan, in Orissa, but I think there are huge opportunities, honestly, for bringing up this sort of skills training. Because India is becoming almost a three-tiered economy. You have the sort of the 0.1% of people who are kind of really the owners of businesses, the big industrial families. Then you have this segment of white-collar qualified people, and then this large group of people who are kind of cut off from the economy, and the opportunities. So this will obviously cause some concerns, especially as it's a young population. So I think there are a lot of these things that need to be taken into account. But before I hand over, I'd like to just reinforce what Jai said, is that I think if you look at all the metrics, it is clear that South Asia is well positioned for growth and continuing to do all the good things that it's been doing this last few years. If you look at the banks, for example, the state of the health of banks is always a good sector for the economy. If you look at all the big banks in India, whether it's HDFC, ICICI, Axis, their capital adequacy, their balance sheets, very strong. So even though we might go through a bit of financial turmoil, they are well positioned to ride it. And then if you look at corporate profits have been very good. And companies are there to ride this period out, make investments. So all of those macro and micro factors are very much in India's favor. But I think infrastructure, the need for more skilled laborers to come in, because I feel it on the ground, in Blackstone. If you want to hire a finance professional, it is more expensive to hire a finance professional in Mumbai than it is to hire a finance professional in Singapore, Jai. It's almost like we can send somebody on secondment, will be cheaper, except housing will kill you. So I think there's a lot of this stuff going on, which is kind of counterintuitive. You think, oh, go to India, you get cheap. You can't. So that therein lies Bangladesh's opportunity. If Bangladesh, Jai mentioned BPO Bangladesh. If Bangladesh young population, they will be IT savvy, but they've got to get their English skills up. They must be English speaking, to do the all the call centers and so on. That you would sit. So they were. That's why Philippines is a competitor. Philippines big call center. One of our big IT BPOs, TaskUs, listed on the US Stock Exchange. All the people are in the Philippines. So Bangladesh language skills very important. But I think Bangladesh. The other thing is, it needs, and I think we have to see whether some of the companies like Ascendus and so on can go in and set up industrial parks there, get the infrastructure up, so you can have maybe in partnership with one of the Bangladesh industrial corporations, so on, set up good quality industrial parks, and also this energy transition that I mentioned. There are lots of buildings and commercial property which need to be modernized, with their energy guzzlers. You need to make them more energy efficient. Look at solar, wind. These type of things. These are the opportunities.
So this is great because I know that Mr. Mukherjee is very passionate about the opportunity that infrastructure is. The infrastructure projects that are happening in Bangladesh and the infrastructure opportunity that is there. So I'll just ask you this, Mr. Mukherjee. Some of the industries we know are traditional, like food and textiles or apparel. But you've spoken about the strides that Bangladesh has been making in the infrastructure sector. You even mentioned about the recent the Podda Setu, the Padma Bridge project, which was completely funded by Bangladesh. Can you throw some more light on how that ecosystem is developing for infrastructure projects? And then I will ask you a question also around what Mr. Banerjee was saying about education and the educated population in Bangladesh that makes for a good discussion. But if you could just throw some light on the infrastructure side, please.
Yeah. Thank you, Bipin. Thank you, Gautam. First of all, Bangladesh, there was a recent debate, and actually which economy will grow faster through manufacturing or like this garment factories, or the Indian side, which is doing the ITs. So that has to be seen in next decade. What happens. But I think the last 12 years, Sheikh Hasina, the government has. She has spent a lot of time trying to develop the infrastructure, and one of them, as you said, is the Padma Setu. And Padma Setu is going to correct economically, correct politically. Even if it is not correct politically, I think there you get a lot of opposition. It is over the Padma River. So there could have been a lot of environmentalists who could have stopped the project. But this, as I was mentioning otherwise in our conversation, that this also brings in people from Shakripur to Dhaka. Previously people used to be in an ambulance, and that ambulance used to be in a ferry, and then that ferry used to come to the other side of the road, and then now with that 6.5 kilometer bridge, that's going to completely change. Secondly, I think she took a very, very wise call on not falling into the debt trap. I mean, she could have finished this project in 6 years' time. It took 4 years more. But I think it was completely funded. The Chinese initially came and started trying to get money at 12% or whatever their interest rate is at US dollar. Part of the, OBOR. They kept it aside as such. And then, again, to prove it a point, is just not only the Indian pressure, but she also didn't take the money from ADB and IFC. Just did it completely of her own. So there's a huge, focus that which she's trying to do. She's also building 4 big SEZs, special economic zones in Chittagong port. As such, which is one is by Korea, one is by Adani's. The third one is by Japanese, and obviously she had also earmarked a place for Singapore to whenever Singapore finds interest to do this as such. So there is a huge. I mean, Padma Setu is an iconic project, so that one can talk about. But there are there are hundreds of, because it is a place which also has many rivers, and it is we have to cross many rivers to be in Bangladesh. To as such. And she's building small bridges all over the place and connecting the whole country as such, and at a very, very high pace. So I think for Singapore, there's a great opportunity to get into that. There are many companies there who do not even, have the technologies. They want to do it as such. So the Singapore companies can provide, support to all that. As Gautam just now said, that companies like Ascendas can build, try to see what they can build in these logistic parks or the industrial parks which they are building. So I think there is a huge focus on the infrastructure side.
No, thanks, Mr. Mukherjee. I think this whole talk about infrastructure and how the opportunities exist there. But when I look at some of the companies that want to invest or want to participate in that growth, the first question that comes is, how do we do this? How do we enter the market? And there are 2 points that I think one is what Jaya mentioned about looking at the states. But I'd also like to bring in Marcus on this. Marcus, you've been there and done that, right? You've done something that many in our audience are hoping to do, which is take a business successfully into markets in South Asia, like India. Could you perhaps just share with us some of your experiences, some of the practical considerations that you see, and things that businesses should be thinking about? What are the pitfalls that they should be avoiding? What are the opportunities really mean for them?
Yeah. Thank you, Vipin. So Ecosoft, we are a water solutions providers for buildings, estates, and industries. We have been active in India for the last 10 years. And when we started, we looked at India. We saw, an opportunity because India is a very water scarce country. On a per capita basis, India has, a lot less water than China, US, and some of the large economies. There are significant infrastructure gaps. We just compare India with China. Today, pipe water coverage in China is about 75%. The same for India is less than 20%. And even if you're lucky to be among the 20% that has got pipe water, means that you get pipe water for 2 to 3 hours a day. So with climate change and, you're going to see a lot more issues. You have floods, these few days, and some days during the summer, you have extreme droughts over there. So clearly that there is a need for, better water management solutions. But, how does it work? And what is the business model for a Singapore company like us? That was the question to us when we looked at India 10 years ago. The thing that came to mind was thought we were smart and we were intuitive at that point in time, is that, well, so India has a need, and then there's China, who's very good at producing stuff, and we are based in Singapore. We're good at technology design, and as a business hub, we can design stuff and then manufacture in China and then ship it over to India. So, and as a business hub, through some transfer pricing management, we'll be able to capture some profits in Singapore. We failed. We failed very miserably, from then, because for a few reasons. Number one, the standards were different. The Chinese standards and the electrical standards and all totally different from India. Language is different. The cost of the transportation and the tariffs killed us. It was 25% import tariffs, right, into India. And then we were shipping it not just to a port city in India, we're shipping it to Madhya Pradesh. So where did we land? We landed off, in Calcutta, and then from Calcutta tried to, truck it off to Madhya Pradesh. It was horrible with that. And then once you got that, the story doesn't end. It's, you need to install, you need to make it work locally. The communications between the Indian team and the Chinese manufacturers not so easy, right? We have this saying about the Hindi chini bye-bye, but it's not so easy. It doesn't work out so smoothly. So on top of that, we didn't have very good advice, people like you, to advise us at the early stage. So a lot of the regulatory compliances, were inadequate. Just sending money in as paid up capital, and we didn't know that there's such a thing called forward inward remittance, certificate, and how to deal with those kind of things, and whether we could even repatriate money back into Singapore. So in short, we made a lot of mistakes. We lost money in the first few years. Then we tried to adapt and got smarter, right? I think two things for me, right? Number one is localization. So we localized everything, essentially localized the Indian team. We adapted the design of the technology which brought in local design and local procurement, local manufacturing, made it relevant for the Indian context, right? Dimensions, the kind of treatment standards, electricals, solving the local problems. And that's basically a small scale wastewater treatment system that it could fit into an apartment block, a residential colony, and that is a huge demand. And that one, I'm proud of the team that eventually we won the first prize in technology innovation by FYI. And it's become a product that today we are manufacturing in India and then exporting from India. And last week we have a set that we ship from India to Singapore. We get it installed, for the construction site over here. So that's one. Number two is a focus. We always like to say, in all the reports that we have a market of 1.3 billion people, but realistically not possible for us to address 1.3 billion people, at one go. It's so many different states, different cultures, and different segments of the economy. How they actually segment that market, vary carefully, very smartly. And eventually we decided we cannot go all India. We decided that for a start, let's go for the water scarce regions, for the scarce regions, targeting specific applications. Rich people, poor people, all affected by water, but you can't serve everybody. We serve certain segments, and we targeted on building, commercial buildings, residential colonies, industrial facilities. A good end of the market that has the challenges and can afford to pay. For example, those people who are using tanker water. Focusing geographically, eventually then we decided that we'll focus on sort of Hindi-speaking region, Madhya Pradesh, up there, and within Madhya Pradesh, extended from Gwalior, Bhopal, Indore, Jabalpur, just that range. And even does this give a sense of things, a sense of dimensions. Just driving from Indore to Bhopal, stop over for lunch, and then driving out to Jabalpur is one full day. If you're lucky to get there, in one piece. So already that is already a huge geographical region to cover. So we got smarter in that, localized, and focus. And today I'd say that after 10 years, I cannot say that we're very successful, but we managed to survive and poised for a little bit of growth, after this pandemic.
No, that's fascinating. I mean, some of the places that you've mentioned are places that I've visited as a child. And the other thing that I'm super impressed with is your diction on Hindi chini bhai bhai. I think that is fantastic. No, but very, very good elements that you've highlighted there, Marcus. And I want to turn this to both Mr. Banerjee and then to Jaya as well, about this whole thing about where do you enter, India being with the size and the population, the demographics and different states, languages, and so on and so forth. How do you think of it, from a business that is sitting here in Singapore and wanting to venture into a country like India or perhaps even Bangladesh? How do you look at it, and where do you start from a geographical perspective?
Maybe I just say a few words, and I think Roshun here will also have some, very interesting insights because he runs businesses in India. But very, very quickly, I think Marcus, that was very impressive. I'm so glad that I asked you to focus not on sustainability but your experience on the ground in India, because I think this is the young Singaporean. His work in Pricewaterhouse when I was there, and it's amazing that he's talking about Jabalpur and all these other places, and he has learned from his
the service provider that bring their client to the Pathfinder.
Can you please? I think somebody's got the mic on. Yeah,
I'm referring a few of these.
Okay, so. The
PwC coaching, yeah, Gautam.
So I think you made some very important points. I mean, one is that India is not one; it's a subcontinent. So you have to decide where you want to be, and a lot of issues are decided by the state, and some states are more investor friendly than others, you have to make an assessment of for your business which is the right state. I think Jaya also made that point, and it'll vary for the type of with the businesses. Some businesses it may be the southern states, some businesses may be Maharashtra or Gujarat or Rajasthan. So you need to make your assessment. The other thing I think which is also very important is that you can't get foreigners to run businesses in India. You need for Blackstone, virtually everybody in our Indian office is Indian. They've studied in the US, they've worked in the US, but they've gone back. They're Indians. In fact, we have, I would say that we need a little bit of diversity, some non-Indians because we're a US company, but we are like almost 99% Indian. And generally speaking, for most of the emerging markets, you can't get, we don't do business in emerging markets unless we have a presence on the ground with local, if in certain situations we are not able to get immediately local people onto the payroll, we would have senior advisors who are well connected who are locals and well connected in the local market. Otherwise, it's going to be very, very difficult. So, and India is a classic example of that.
And so that would be also, Gautam, the aspect of, you know, how you look at it if you don't have the kind of size, would be to look at locally connected advisors who can help with those aspects. Is that?
Yeah, I mean, when I went to run PwC India, I mean, one of the individuals who helped me was Prashant Mukherjee, you know, because, you know, he helped me with ideas on how I should deal with regulators and just understand the whole landscape. And maybe, you know, he can give you some examples of how he continues to do that, help many Singapore companies with in that space. Because, you know, it's impossible for a new company or a new person running a business in India to understand how everything works. You know, you've got the income tax people, you've got you know, the various customs guys to deal with. You've got, you know, and some of it is state, some of it is center. It's a real minefield that you need to negotiate. Maybe I'll give others a chance to speak.
Jaya, you mentioned 4 states, and I'm also very impressed with your knowledge of the states in India, and you know how you've navigated through some of that. Almost as impressive as Marcus and his Hindi skills. But tell me a little bit about, you know, those 4 states that you mentioned, and how should businesses be thinking about it?
Well, you know, I think Gautam I think he hit it all the right spots. I think you really have to take a look at the company itself, yourself, right? The company, and then look at what the various states offer. I mean, if you are in manufacturing, let's say in furniture manufacturing, take an example. Today, Tamil Nadu is making a lot of moves in that direction. They have an available ecosystem that supports the furniture industry. So very specific. You have to get down to the granularity here. So which are the states, Gautam mentioned it also, which are friendlier? And I think those 4 that I mentioned have proven over the course of time to have that, you know, that are more comfortable, that are more accommodating, a bit more transparent in the way that they've been dealing with foreign investors. I mentioned Tamil Nadu, Maharashtra, Gujarat, and Karnataka, of course. Again, you know, availability of talent pool, which is tight, and also sometimes your partners too, right? Many of our Singapore firms, they're SMEs. India is a market, I should just add, it's not just a market for the larger firms, but we've also seen many SMEs going into the market. Just last year, we ourselves at Enterprise SG, we facilitated over 60 firms going into India in the course of the year. So really, also your local partner and where they may have a base could also influence the decision. But I will go back to maybe a couple of points, right, to reiterate. The investor-friendly states, because what's relevant to your business, and the availability of a relevant ecosystem to what you're producing or what you're trying to deliver in India.
Got it. Terence, I'm just going to bring you in briefly here, and kind of moving away from, you know, what should be, you know, the geographical aspects that we need to look at, but from a business perspective, you know, investments are made in order to make money. One of the things that we often hear is, you know, the challenges with repatriating, you know, money that is made in the country, the challenges with, you know, the FX that you mentioned, you know, the fluctuations in foreign exchange. Can you throw a little bit of light on, and I know that you've covered a few of these things already in your presentation, but I'd like to, you know, specifically ask you in terms of businesses that are setting up, what are the things that they should be looking out for?
Vipin, thank you for the question. And I'm really enjoying the content being shared here and the relevance to the local markets. Marcus mentioned a very interesting point earlier, right? How easy it was to send money in, understanding the documentary requirements around that money, and how hard it was to figure out a way to repatriate the money. So cash flow, money concerns, understanding your options for payments in and out of country are extremely important factors to consider before you even put that investment in, as Marcus has rightly pointed out. Now, once that money's planned and committed, you probably, like most businesses, have a planned horizon for issuing that spend. So over the horizon of that spend, how do you guarantee that you don't get exposed to market conditions and end up spending you more than you should? It could happen the other way. Exchange rates move in your favor and you pay out less, but should your business and your P&L be based on luck, would be the question. Similarly, as you run an ongoing business, all your potential inflows and outflows need to be considered in terms of, how certain they are. As they become more certain, how do you lock in the rates that protect your margins and therefore let your business sustain its long-term growth? So those are pure FX related questions. I would add that, that there is a distinct interest in fintech in this forum, and having participated in some emerging market fintech ventures myself, one of the easiest business cases to write has always been, oh, look, Bangladesh, for example, has 6% of its GDP in incoming remittances. Can we set up a fintech onshore with a wallet and disperse cash and send it to spend as needed? And the question of focus that Marcus talked about comes to mind, right? What is the audience? Are you designing a solution for the urban sophisticated? Are you designing a solution for the unbanked in the village? Because that brings itself, as with all money, questions of how do you open an account? How do you verify the identity of the person behind the account? And how do you prevent fraud? So copying and pasting solutions wouldn't be the way to go. It has to be a really considered measure with, hopefully, the advice of the many esteemed experts on this panel. Thanks, people.
Thanks, Terence. Very interesting insights there, and something that I can add that exiting businesses is also, while you're investing, you need to think about how you're going to exit the business as well, if at some point of time you need to. And my area being tax, one of the things that keeps coming back to me is what are for repatriation as well as exiting the country, what are the various taxes that apply, and how do you factor that in? I'm going to turn it around to Mr. Mukherjee. Mr. Mukherjee, the other sector I remember that you mentioned is the hospital management, right?
When you benefited,
yes.
Remember
there
is
some other something else that's
make it very accessible for as many of the SMEs.
Is there another sound, you mean?
Yeah, there is something else.
Somebody else is speaking for some. It's gone off.
Yeah, it's gone off now.
Yeah, okay.
So hospital management is something that you were mentioning also in the context of Bangladesh, and and given that there is a lot of activity happening in that space in Singapore, how do you see that as an opportunity, and what's happening in Bangladesh on the ground, Mr. Mukherjee?
Yeah, first of all, I wanted to say, Gautam was extra kind in talking about how I have no capacity to help an organization as big as PwC or Singapore Airlines. I just did whatever little bit I could do. But, but I'm going back to these questions which you asked me about the hospital. What is happening today is in Bangladesh has a lot of capital, unlike what is thought in the outside world. People think that, it's a poor country, it has, but there are a number of unofficial billionaires, and which I could say in Bangladesh will be anything in excess of 40, which is in 2009 the India when came up with the Forbes list had 40 billionaires. So in a country of that size, and so Bangladesh has probably between 30 to 40 billionaires. There's a lot of capital. And, there's a huge demand of, people's wellness at all levels. So, Sheikh Hasina's government is trying to do two. One is that they're developing a number of district level hospitals, which a government is constructing. I do not know how successful that policy is, because you need to send the doctors there. And the doctors do not want to go outside this thing. But I think she has made it compulsory for people to, when you do a medical course, that you go for 4 years to, work there as such, but they still remain very, very junior. So, but there's a lot of nationalism, a lot of people go and work there, senior doctors. But the other thing which is happening is a lot of people are investing in building a hospital, because that is a big business. Because otherwise people are coming to Singapore, Bangkok, wealthier ones in, England, Calcutta. Calcutta has probably 14 hospitals, big private hospitals, and 70% of their clients are from Bangladesh. As such. So people are just trying to build everything, in Bangladesh. So the people are building the buildings, the entire infrastructure. What they need is a company to come and run those hospitals right from the basics. So I think 3 days back in Chittagong, there's a big hospital, Imperial Hospital, which is jointly owned by the. Actually, it has been funded by ADB. ADB is 25% shareholder, and then 75% of the shareholding is from a private individual who owns the Chittagong Eye Hospital. And Apollo has signed an agreement with them to to run it from the building is done, and from there everything, the whole consultancy. So I had previously, in the context of Indonesia, I had a meeting with the owner of the Raffles Hospital, and he was very much willing to go to Indonesia, to have a similar arrangement. And there was a meeting which I had organized with the Salim Group of Indonesia, with so he was talking about trying to run their Pantai Indah hospital in this thing. I said, if there's an interest of Singapore hospitals to do that in Indonesia, which has many other private hospitals, I think there's a much larger opportunity today in Bangladesh, because Bangladesh also do not have the restrictions like Indonesia on the foreign doctors. And then the medical colleges there are very good, and many of the doctors also come to Calcutta, to the best of the medical schools, Calcutta Medical College, Neel Ratan Sarkar Medical College, and all this. And then they go back and can practice there. So I think there's a great opportunity for the Singapore hospital. They do not have to invest anything in capital. They can just run that business of their own. They just provide the consultancy right from the basic, and there's a lot of economic opportunity for the hospitals there.
That's very insightful, Mr. Mukherjee, because we've been talking about med tech, and we've been talking about health tech, but hospital management and all of that element, I think is another very live sort of opportunity that is there for Singapore companies to partake of. I think we're kind of coming to the end of, close to time. So I'm just going to go around and maybe ask each one of you to give me 2 points. I know it's in relation to South Asia. It's in relation to, these real behemoths. But if you were to kind of say 2 things that Singapore businesses should be thinking about as they look at investing into these South Asian markets, what would those be? And it can be in any order. So let's go with you, Marcus. Let's start with you. You've had the experience of having been there and done that, and wearing the stripes. What would you say are the couple of key things that you would encourage businesses to think about?
Well, we learn from our experiences. I think first thing I would say is don't just look at the headlines. A lot of headlines. You read, in the papers. For example, right, when the Modi government first came out, and one of the big initiatives was to have 100 smart cities. And at a point in time, we were very optimistic, and we're going to have smart this and smart that, and the kind of things that we're going to have in Singapore. No, we were disappointed at how those things were developed, right? But having said that, right, it's not all gloom, and doom. There were actually indeed certain initiatives that took place. There were indeed certain budgets that were given to some cities, particularly the BJP controlled ones, to do some things. And not all the plans were realized, but some things that happened, there were actually better roads and better water systems and so on. So then I'll say that there's don't and then there's a do. Instead of just looking at the headlines, to be able to walk the ground. India is such a vast country, you can argue that whatever you say about India, India is very bad, India is very good, India is very advanced, India is kind of backwards. Everything kind of has its truth, at some place at some point in time. So finding that some place at some point in time when the truth happens, and that's where we can find opportunities.
Very well said. Thank you.
Yeah.
Thank you, Marcus. Jaya, if you want to go and give us two of the things that you think.
First, I must echo what Marcus said. Sometimes the macros don't always tell what the reality is. There are opportunities closer to the ground, and I think that's very important. The second thing is, for those who haven't been, please come, please visit, please get to ground. Of course, we are here, Enterprise SG and many others are available to help. And the second point I would say, for those who are there already and facing the challenges, then I would say stay the course. It's not easy, and it's easy to be frustrated with the various things that get in the way. But I think it's very, very important to stay the course, just like Ecosoft has, and navigating the challenge over time. I think the benefits will come. Thanks.
Thanks, Jaya. Mr. Mukherjee, your thoughts?
Yeah. First of all, I think that, for India, I'm just going to, as you said, so I'm saying for India, just choose one state. The material of, obviously the BJP ruled states has an advantage, but, there are states like Odisha, which is a role model. 20 years rule of Naveen Patnaik, it's unbelievable. Good, I think so. So I think, just choose one state. Just do not, India, you go to 10 states, you're dealing with 10 countries. Immaterial of, even if the same BJP rule state, I think the Uttar Pradesh experience will be very different from the experience of Gujarat. Yeah. or of Karnataka or whatever. So I'm saying that for India, just choose one state. And for Bangladesh, my strong suggestion is that, which is contrary to many beliefs, I feel that the state government today, works through an agency called BIDA, Bangladesh Industrial Development Authority, which is chaired by the Prime Minister. And there was a lot of land, which when the Pakistan's occupation, or when the Pakistan was, it was called East Pakistan, the lot of military cantonments were built in that period, as such. So that military cantonments within the Dhaka city, Chittagong, Mymensingh, all the top big cities, they're very, so the government has working with the military, which the Indian government has not been able to do it for last 75 years. So the army and railway has not given up 1 inch of their land in India, 1 inch. So whereas in Bangladesh, there's a huge progress on getting those land, and there's a good effort, a good partnership which can be shown between the Bangladesh Industrial Development Authority, BIDA, and with the individual companies and entrepreneurs in Singapore. As such, I would just add one small, the advantage of Singapore. And I'm just mentioning this. Last night, at about late evening, I called the lady who is going to be the president of. I knew her. We went to Jharkhand's governor, and her instant reaction was, when I become, saying it in English, but she spoke in Hindi, said, when I become the president, please make sure you bring a Singapore delegation to me. The image of Singapore is so great with anyone and everyone. And because with the forefathers of this country has built, of Singapore, I think we could capitalize both in Bangladesh as well as in India. Thank you.
Thank you, Mr. Mukherjee, and I completely agree. This is a fantastic opportunity, not just for Singapore, but it's a great opportunity for the South Asian countries as well. Terence, any thoughts? In terms of what are the couple of things that you would encourage companies to think about?
Thank you, Vipin, and I'll be curious to hear yours too at the end of this. For the first part, understand your cash flow and how to make payments. When, where to convert, what are your options for paying in, what are your options for repatriating, whether you're looking at it as an investment, whether you're looking for a trade partner, it's critical that you understand and know the timing and essentially not be stuck in a situation where you cannot fund what you need to fund. The second is, at the risk of sounding like a broken record, manage your FX risk. Thank you.
Thanks, Terence. Very clear. Mr. Banerjee, the last word. How would you kind of look at all of this? We've heard your views. We've heard the views of very, very distinguished panel. Key elements that come out of this, and what are the things that we should be really thinking about?
I think, Bipin, with India, you can never have the last word. It's just, it's just not possible. But I think it's been a really interesting afternoon with so many different perspectives. And we all in our day jobs look at India. I think I just want to leave our audience with the fact that India is too important a market, with so much potential for any business, any company not to look at it. But as we have heard from Marcus and others and our own experience, it is not an easy market to navigate. There will be issues. There will be, you have to factor in for things that will crop up, whether it is, foreign exchange. I think with foreign exchange, it's very interesting what Terence was saying. You have to remember that India runs a deficit economy, so every year, India is not able to balance its payments. So the currency will decline. I mean, if you so Blackstone has been in India now for 15 years. And when we make an investment, we usually make an investment for at least a 3 to 5 year period. We factor in the rupee depreciating as part of our investment model. Because actually, I know Terence was saying you can hedge and all that, but those are usually for most businesses quite expensive. So I'm saying that you have to be prepared for hidden costs. I mean, foreign exchange depreciation is not a hidden cost; it will happen. But you've got to factor in other hidden costs which you may not be able to plan. So have a contingency in your budget and your planning, and then make sure that you have either a senior advisor or a partner. Certain businesses, for example, our business parks, we've always done it in partnership with a local guy, because it's impossible when you want to own land and so on to do all of it as an American company. You need somebody on the ground, whether it is in Bangalore or in Pune or in Hyderabad. Again, you have to pick the right states. And as Prashun says, if you're a small company, just go in one state. I mean, even for us, we are as a huge company here with a lot of resources at our disposal, we are in 4 or 5 states. And I think just be very, very careful about those things. The fact that you will need to spend time on regulatory compliance, you will get often surprises. People saying, "Oh, why haven't you done that? Why haven't you done this?" So make sure that you have good advisors like KPMG, good lawyers, right from the outset, and make sure that you build in this contingency. So whatever you want to go in, the margin must be good enough for you to take all of this in. Otherwise, you'll have the issues like what Marcus mentioned. And everyone makes mistakes in India, but you must learn from the mistake. And because the returns can be profound. I mean, just tell you for Blackstone, our first Asia fund, we never had an Asia PE fund. Our first Asia fund was dominated by investments in India. And over a 4-year period, it is documented, gave a 61% IRR. These are investments in India, which things like IT service companies, the packaging companies, edutech companies. These are all Indian businesses. But usually, the other tip I would give you is if you have a good Indian business with some leg outside of India, whether you are selling to customers outside India, or whether you have some other foreign element in your in your business operations will help you to not only hedge forex. So, for example, in our business parks in Bangalore and Pune, the companies that are our customers have global businesses. So we can we can increase rents because their income is in US dollars or euro or whatever. So so they have a large part of their income coming from overseas. So we are not stuck to the sort of Indian rupee. So try and see if you can have a business which has a foreign leg in terms of its earnings or so on. So these are some of the things that you have to find ways of reducing some of the risks.
So I've got to ask you this. I'm sorry, I was I was kind of winding this down, but very interesting point that you made. Do you also think, Mr. Banerjee, that the timing and how long do you kind of plan for in terms of a certain amount of return or exiting a business or whatever that is that more in relation to India and Bangladesh and South Asia generally as compared to some of the other countries, and what should businesses be kind of planning in that sense? I know that it would be different from sector to sector, and those kind of nuances might be there, but generally speaking, would you say that it's a slightly longer gestation period?
It doesn't have to be, Bipin, but for most businesses, I think there's a lead time trying to understand India. For us, for example, the first 3 or 4 years were learning experiences. We made mistakes along the way. We invested in the wrong things and so on. We had the wrong people, but that's where it comes in. It's very for you to be able to get off the ground without any kind of setback initially. I think you've got to be lucky, or you have to be in the right kind of industry. But generally speaking, it does take a bit of time. I mean, you look at the number of businesses who've gone in, have had a problem, and then kind of course corrected. Is not uncommon. It's not uncommon. I mean, I mean, I'm seeing also, I'm on the board of Singapore Airlines and Vistara, which is our kind of 51-49% airline in India. It's been a tremendous learning experience for us. But initially we went in with certain assumptions, but those assumptions changed because the government changed the rules. They said that you would be able to fly out of India within a certain period of time, but that didn't happen. So we had to wait another 3 years, and the 3 years is a long time. So that's the same thing again with our real estate businesses. One of our ways of exiting was by having REITs, but the REIT legislation was not in place. It took us almost 2 years to put the legislation in place. So I'm saying that this is something which you have to factor in. But once you get past those obstacles, the horizon is something which will be there for you to make returns over a long period of time, and good returns.
Thank you, Mr. Banerjee, and thank you, gentlemen. It's been an absolute pleasure moderating this event, and some fantastic, thoughts and insights from a vastly experienced panel. To kind of finish this off, I'd say that the opportunity is huge. You need to be planned. You need to make sure that you have the right focus and in terms of the geographical spread and the partners that you go in with, etc. But as long as you plan, there is a pot of gold at the end of that rainbow. With that, I'll pass it back on to Dexter. Thanks very much.
Thank you, panelists and Mr. Balakrishnan. We have come to the end of today's session. We hope that this webinar has provided information, inspire an organization to a very extent on potential internationalization into South Asia. There will be several upcoming festivals on South Asia and ASEAN. If you are interested, please scan on the QR code provided on the slide to register or contact us for more information. On behalf of Singapore Business Federation, we would like to thank everyone for making this event a success. In particular, our principal partners, Convera, supporting organization, Enterprise Singapore, and Confederate of Indian Industry. Thank you for joining us today, and we will see you again.